What are you seeing in the current market conditions?
Well, definitely on a macro level, cap rates are down in the market, and our transaction volume on a micro level is down. I'm hearing as much as 45 to 50% compared to last year. Our on a micro level, our transaction volume the first 2 quarters is up 200%.
What is driving that?
On a macro level, it's kind of the key indicator is Fed started to increase interest rates. The market started to feel that in early Q2 2022. They continue to increase rates throughout 2022 and into 2023, and that's definitely having a direct impact on all markets. On a micro level, we were feeling some post-COVID turnover in our sales force. And as we kind of moved through 2022 and realigned our team, now we started to get some transaction in the second half of 2022 and into 2023. So we're up 200% year over year. Now, we're not at the levels of 2019 to 2021. No one is right now. We're not back there, but that's kind of what we're seeing in the market.
And what are you seeing in cap rates this year versus last year?
There's definitely upward pressure across the board on cap rates. Not as much as you think. Maybe a 25 to 50 basis points. The one thing I will say is last year people were chasing yield, kind of at the tail end of the peak of the market. Maybe doing a little bit more double net versus triple net. Now we're seeing maybe 70% triple net versus last year it was 30% triple net. Average lease term remaining is maybe 11 years versus 7. So what we're really seeing is maybe the cap rates aren't moving up as much, but there's more of a flight to an easier, better asset class with true triple net and long term.
And to wrap things up, where do you see the market headed for the rest of 2023?
Well, we're still definitely in a shifting market, and buyers are being selective. But cap rates are not moving as much as they'd like, and that's definitely directly due to supply. But there will be opportunities. The only area where I'm seeing a little bit more upward pressure on cap rates is on maybe brand new 14 to 15 year triple net dollar generals, and I see continued upward pressure on those cap rates for the rest of the year. Probably will normalize in the 6.75 to 7.25 cap range somewhere in the next 6 to 12 months. And that's really where cap rates were on those type of assets pre-early 2020, and they had been there for several years. Additionally, what I'm surprised by is there's still a flight to quality, and high quality assets we're not seeing any necessarily decompression in cap rates, still lots of demand. So for the rest of the year, if you're not perceived as A-class real estate, you're going to see continued upward pressure on cap rates. So that's really kind of where we are for the year.